Yeah, that definitely looks like a boat shirt,
Yep.
which makes sense because you're a stock guy and like I'm sure you make a ton of money. So
It's the weekend,
you
man.
got a boat, and you're gonna enjoy it. Anyway, we're gonna get into earnings for this upcoming week. But before we do that, any big surprises from the previous week's earnings or anything that you were looking at as far as market or anything?
I mean, if anything, Bank of America actually might be the biggest surprise where they actually beat earnings estimates, and it's actually ended the week at the lows, 23.25, I think.
That makes perfect sense.
Right? Go figure.
All right, well, let's just jump right into it. Let's see what we got going on for this week.
IBM should be interesting. That's about it really for Monday, though.
Okay, think it's gonna beat?
They,
Okay.
they should. They're pretty consistent, anyways. And my worry with IBM long term is they have a lot of debt. They've been buying back a lot of shares, similar to Boeing, and it could really turn south to them if their earnings decline.
Okay.
Yeah, it's like a double-edged sword. When you buy back shares, you decrease the denominator in the earnings per share equation. So you inherently make it look like you're growing just because you're reducing the share count. That is what earnings get divided by. But when earnings go down, that is a negative number at that point.
Hmm.
It can actually go against you.
Tuesday, you got Coca-Cola, Snap, United.
I'm very interested to see what Capital One reports because their stock has bounced, but it's back at like 60. It really hasn't recovered the majority of the losses like most other banks have. And it's because of the worry of their exposure to like the gas and oil sector in particular in Texas. So I'm curious to see what their loan loss provisions are like and how their earnings look and their guidance too, because that one could actually rally pretty well if they don't have a horrendous earnings report. It's kind of like Wells Fargo, the same logic as last week, where a lot of it I think is priced in already. Where I mean, it's like the kitchen sink has already been thrown out the window. So
Right. Yeah.
yeah, there's really not much more that can be coming out. I think at least that could really push the stock too much lower. I think Snapchat will actually do pretty well. A lot of people just stuck at home for most of the second quarter.
Does
So
Snap only own Snapchat, or do they own other
that's
things
it.
as well?
They try to pretend there's something else besides a one trick pony. They're a one trick pony.
Okay. All right.
Entirely.
So
Yeah.
hopefully a lot of people are snapping.
Yeah, and we'll have a. What's interesting is that United is Tuesday. Delta already reported last week, but that'll be the second big airline, and then
Delta beat, didn't they?
they beat expectations.
Right.
They're
Yeah.
losing.
Of course.
Yeah, they're losing
Yeah.
$27 million
When
a day.
expectations are low.
Yeah, the bar was like on the floor and they stepped over it basically.
Okay.
But
Perfect.
they're losing 27 million a day, which is like 1.2 billion a month in
That's nuts.
losses, and they only have like 4 billion just under that left in cash. So
Yeah.
it's not a good situation at all, and
Okay.
it won't be for any of them honestly. But I'm curious to see how United does, and then that'll be two of the big airlines out of the way, and then Thursday you have American and Southwest.
Okay.
Just jumping out of order for a second, but you have that kind of sector preview at that point when you have two report. So
Yeah.
I don't think American will have a very good report at all, but
Okay.
we shall see.
So Wednesday seems to be the big day. You got Tesla, Microsoft,
And Chipotle,
Chipotle.
those are the big the popular names that people like to be talking about and buying and whatnot. So I don't think any of them will do well post earnings because they've had such huge run ups. Obviously, Tesla's everyone is well aware of, but Microsoft and Chipotle as well are
Yeah.
within, I mean, spitting distance of all time highs.
So
So
even if those three companies beat expectations, you don't think there's going to be some major pop for any of them?
I don't think so. Yeah, I mean, just a law of large numbers for Microsoft in particular, when they're already worth 1.3 trillion, I think, around there.
Yeah.
It's very tough for that to move that much higher at that point.
And then you're saying Thursday, Southwest, another airline that should keep
Yeah,
an eye out for. American Airlines.
yeah.
What about?
AT&T is the one
Yeah.
I'm actually curious about because their stock hasn't done that well. It's at right around $30. So if they
Yeah, it's
don't
been
have
kind of
their
floating around there for a while.
yeah, and the dividend yield's like almost 6%. So that's actually not a bad one. Where if for some reason it dips after earnings, it wouldn't be a bad thing to buy into at that point if you don't own any of it.
Okay, so then we're closing out Friday with Verizon, American Express. Anything else jump out at you there?
Just those two. I really wouldn't touch any of the others. Schlumberger used to be a big name, but that's oil service, and that's going to be a really struggling industry for a long time with the
Yeah.
glut of oil. Same as Halliburton. So we're starting and ending the week with two oil service plays that used to be dominant players, and they're shrinking just because that sector is just oversupplied with oil.
Elon Musk is supplying so much electric power everywhere that they're just like, what do we do now?
No, it's not even about EV plays, honestly, because like if you look at the actual market penetration for electronic vehicles compared to internal combustion engines, it's really not a huge player yet, as much as you would think with all the news coverage.
Yeah.
It's just a glut of oil. Like, there's just too much oil readily available at very low cost. So
Yeah.
Schlumberger and Halliburton are really just like subcontractors that you pay to then drill the oil well and get everything up and running if you have land that has oil under it. So why would you do that right now with oil at $38 a barrel or whatever?
So Verizon and American Express, what are you thinking about those? Or are you even thinking about them?
I think Verizon ends up going back into the 60s anyways, honestly, a pandemic or not. And then American Express, that's actually very similar to Capital One, surprisingly. The same kind of chart formation, where it regained a good chunk of the losses, but kind of just like lingering. I mean, a lot of the banks are like that right now. People are just very worried about credit losses, because all these companies, at the end of the day, that's what they do. They extend credit as credit card companies, and people can overspend and then go bankrupt because they lose their job or whatever.
Yeah.
So
okay.
I'm curious to see what their earnings are like, but there's definitely upside there with American Express and Capital One. I like Capital One more because they're under Visa, and Visa just dominates. Visa and MasterCard are the dominant players for credit cards.
Okay. All right, Danny. So, gun to your head. What are you going long on? What are you going short on?
Long, I'd probably do Capital One. I like it the most, I think, and a close second place would be AT&T.
Okay.
Just because the dividend and the fact that the shares really haven't had a big run up. Where you're looking at, in the case of AT&T, let me just pull up the chart here. Yeah, AT&T's at 30.25, and I mean, recent lows were like right around 28. So there's not a lot of downside there, I think, going forward.
Okay.
And it pays a pretty healthy dividend. You're looking at $2 a year, 208 a year actually. So that's not terrible in dividends for a $30 stock. And then on the short side, you would think I would go Tesla here, but I really wouldn't, just because it's too strong. I'd actually probably say Microsoft, just because of the law of large numbers and the valuation. The valuation is stretched for such a huge company to be trading at like almost 40 times earnings is unheard of. And they're not growing fast enough. They haven't in years. I mean, you have to go back to like 02, 03 to have the growth figures that would justify that kind of valuation. So
yeah.
I think there's far more downside than upside left in Microsoft, where maybe it goes up, I mean, the all-time high is 216. It's at 202 right now. So it's dropped a little bit. But I could see that easily becoming a $150, $160 stock again before it gets back to even 220. So there's not a lot of upside compared to downside.
All right, Danny, that was a quickie. Thanks for your analysis. And we'll be back soon with some more videos on some options. All those options closed out well for our second month, so we're gonna take a look at which ones we can set you guys up with next Monday, or tomorrow.
Tomorrow, yeah. That's the actual options. If you had done it to the sizing that we recommended, you'd be up just over 20% on 5 trades.
Not bad, buddy. Not bad at all. All right, man. See you tomorrow.
Sounds good.
All right, see you, man. All right, bye.